Hey, good morning. This is Mayor Valensky with Driving Markets. I hope you're all well. Okay, quick caveat. Anything said in this piece is an opinion only. It's purely for media publication. I'm not an investment advisor, not a financial advisor. It's just there to give you a bit of experience, a bit of knowledge of what's going on. Off we go. So overnight markets again are down, starting off with Asia, feeding through to the US futures, the Nasdaq, the S&P and the Dow are down. Obviously, all European futures are down with the FTSE down. Again, the stimulus or the reason behind this is what's happened with Jerome Powell and the Jackson Hole Symposium from Friday, when Jerome Powell, the head of the Fed chairman, said clearly that they expect more pain and they're not going to be dropping interest rates or stopping the interest rate cycle soon. Remember, I've been calling interest rates in the US at around about 4% by year end, in the UK at about 3.5%, 4% by year end, and going into next year we're going to have 6-7% interest rates and probably inflation about 18%. The central bankers are well behind the curve and they really are just too slow to act. Take Joe Biden, for example, Sleepy Joe and the Democrats, which is probably the worst government ever and definitely the worst president ever with the worst vice president ever. They're now going to give student loans, or they're going to waive student loans to the value of $300 to $800 billion worth. Now he's doing that purely to grab votes for the November interims in the US. It may work, it may not work, who knows, but it is really a desperate act of wiping off between $300 and $800 billion worth of debt, and it's probably going to knock off all the existing students and also the previous students that have paid off the debt and those that have actually just about to start university that don't qualify for this wiping off of the student debt. And that means another 800 billion added to, it's a stimulus package effectively added to the debt that America has at the moment. Looking at this week, you've got the non-farm payrolls on Friday, which is the US Labor Department numbers, and that is a big number because if it beats expectations again, then I would expect markets to fall because that would represent or demonstrate inflationary pressures within the US. What else have you got? You've also got European CPI and PPI, got inflation numbers out at the retail level and at the producer level on Thursday and Friday. That will have a big impact on the euro and obviously a big impact on indices. I expected inflation there to be considerably higher because natural gas and energy prices are just through the roof and they're totally dependent on Russia, which can turn off the tap whenever they want. Looking at financial markets, and the biggest downside in financial markets, or the biggest victim or sensitivity, will be the high-tech sector, the Nasdaq. Big seller of Facebook or Meta. I think it's an absolute loser, and I'm calling Facebook or Meta down to $100 a share. I've been calling it the whole year down there. It hasn't yet got there. I think Meta needs to be dumped. The other one that is also going to be under pressure is Apple. Now Apple, the reason being is because even though it's got massive sales, it's not bringing in any new products. It's not been innovative for the last 10 years, and therefore if you look at a company that's not innovative, then what happens is they eventually go down, and that's what's likely to happen to Apple. Amazon's also going to struggle for sales, as well as Google. Google's looking for advertising revenue, and Amazon just has supply issues coming in from China. Looking at the foreign exchange markets, you've got a rising dollar, and you're going to have a sinking euro, and unfortunately a sinking pound. People are going to turn to the dollar for safe haven, for strength. You've got dollar yen. Now we called dollar yen also at 140 last week. It's at 138. I still think it's going to surpass the 140 level because the divergence between rising interest rates in the US and lower to zero interest rates in Japan makes the dollar yen an absolute buy. As far as the euro is concerned, the euro is going to keep on sinking. It's down at 99.24 to the dollar. It's probably going to go down to 95 in the near term, or even lower, but that's my call for the euro. As regards oil, I'm calling it at 120. Bitcoin, I've been calling Bitcoin on this channel already for a while, just as needs to be sold. It's down at below the 20,000 level, and will be testing the lows back in June over the 17,000 level, and then we'll see where it goes from there. Could even touch 15,000 as far as Bitcoin and the cryptos are concerned. Ethereum also will probably touch below $1,000 a level as well in the near future, so that will drag all the crypto sector down. But generally the markets are going down. Anything needs to be sold. It's clearly the markets are too high. We're in a bear market. Sell into the rally, sell into any rise, just keep on selling. This is Mayor Valensky driving markets. Have a good day.